Well, good morning, everyone. Welcome to our Friday morning trading room. You'll have to bear with me here a little bit. Had some technical difficulties getting going, so I'm still loading up my Ninja charts, but I just need to pop on the trade manager and we'll be good to go. As soon as the trade manager feels like loading, there we go. That's better. So yesterday, not a stellar day. The market did end up tailing off by the end of the day. My goodness, my tongue is too big for my mouth. Thank goodness it's Friday. Overall, it was a pretty quiet session. I'll pull up the daily chart here in a moment. It will be easier to see on that. There we go. So this here was yesterday's session. The market did eventually fill that opening gap, and you can see a relatively small range, relatively indecisive day overall. Volume, I guess, maybe slightly above average. As I mentioned before, the things to watch out for if you're looking at a time-based chart is especially one that has volume attached. Normally what you want to see is you want to see small volume associated with small bars, big volume associated with big bars. But every once in a while, if you're paying attention, you're going to see the opposite. You're going to see a small bar with relatively large volume, and that is an early warning that something is not quite right. Don't always know what is going to happen, but it's a pretty good indication that something will happen. And this morning, the something seems to be a little bit more bearish as we're getting sell signals across the board here right now. I don't know. I'm almost tempted to try to hop in on one of these. Here's a first micro macro cross lower. Let's see if I can get a second push opportunity on this one. Get in there. Oh, just a little bit too late. I should have used my sell button. All right. Well, it's only a few minutes into the day. The thing with Fridays is very often the market will get busy early on a Friday. And we'll see a bigger move early, and then things kind of settle down a little. All right, so a little flip-flopping. Initially a bearish move. Now things trying to push back. In fact, we may get an early reversal signal. I see here on the Falcon, we're making a little bit of a trend change signal. We got a trend change signal going on there. Oh my, everything's moving really, really quick right now. I'm not used to that. This is supposed to be summertime. Things are supposed to be moving slowly. The Raptor produced a really quick little 232. So a couple of counter trend signals that didn't print because they didn't quite meet the programming parameters, but they were counter trend signals all the same. And that little 232 setup tends to be a little bit more reliable as far as counter trend is concerned. I may end up having to use my buy and sell buttons here today if the market is just going to be so fast. Perhaps an early cloud crossover. I think the high of the morning seems to be rather significant. All right, let's see if we get, there's the buy signal. Oh, we're going to get a second push opportunity on that. A really quick little, doggone it, a really quick little flinch on the market on that bar right there. That was my second push opportunity. And looks like I was a little bit slow on that one too. Now the proper number one signal will develop now that the clouds are crossing. See, there it is. There's the crossover. This is now going to be the proper number one signal. I really like the idea of getting in here a little bit early though. All right, that's okay. Let's put that away for now. Nice trend change here on the Falcon. That we had a few signals kind of developing at the same time. It was a situation where you had to pretty much just choose one of the tools and run with it. It looks like they're going to attempt to fill that gap that was here to start the day. Now I'm a little bit stuck. Now I'm pretty much committed to waiting on a crossover. Or a crossover, a pullback. Okay, and here we go now. Okay, we're back into the hard edge. The thing with this number 3 signal now, I'd like to have enough room that the signal will not interfere with this high, because the danger with a number 3 signal, of course, is that it's not going to continue. It is a continuation signal, so we want to see something resembling a trend. There's the number 3. Let's see if I get a second push on this one, or if I'm going to get stuck. Okay, it's flinching a little bit. Now you can see I have a little bit of room here to adjust the trade. What I'm hoping for is that if the market engages me, it heads at least a couple bars higher before making some sort of reaction. That number 3 signal now pulling back, and we're actually getting another 2-3-2 type setup. Here's the 2, there's the 3, here's another 2. So sell signal, buy signal, sell signal. Don't know if I'm going to get too crazy on the short side just yet, though. Although the hawk, well, mildly bullish. We're introducing some yellow bars again on the hawk. And the falcon, well, the falcon's all over the map right now too. All right, here's another buy signal. So we're starting to develop a little bit of a sideways trading range. We'll see. I'll look to buy if we can take out this little swing high right here. And so far, no. So we'll cancel that. The Raptor's starting to get a little bit of candy striping going on here. We're getting the background highlights without any follow through. That's not what I want to see, as that may also indicate a sideways trading range. Okay, let's see if we get another hard edge bounce. Geiger counter keeps pulling and sticking here a little bit to the bullish side, but so far there's not much follow through. Okay, there's yet another hard edge bounce. Let's see if we get a second push opportunity on this one. No, not yet. All right. Okay. Yeah. James says it's like it's always got to get back to where it opened at midnight before it goes wherever. Yes, sometimes it does seem that way, doesn't it? Traders are a skittish bunch. They're always retesting price zones. They're like the neurotic teenagers. Is this all right? Is it okay if I do this? I don't know which way they're leaning today. We've seen a quick little move lower, followed by a bigger move higher. And I don't know, now we're just kind of indecisive again, hovering around the hard edge of the trading band. Not really moving too far from there. Yeah, could be. Jim says maybe the big players busting stops. You can always see when traders are running stops when there's these false breakouts. So a little bit of a breakout higher, encourage a little bit of buying. Let's see, did they even get above that one? No, they didn't get above that one. Encourage a little bit of buying, then run it down and look to hit a few sellers. So if that's going to be the case, we'll probably see them try to break out here and give us a fake breakout. A couple of signals here we could get on board with. Here was a red bar buy signal on the hawk that you could look to short. Yeah, James says it's been down to 73.23 a couple of days ago, and now it's bouncing off the lower highs put in since then. Overall, I found if you're in doubt as far as the stock market is concerned, you're always better off on the buy side, it seems, than the short side. All right, having said that, we're getting now a crossover sell signal. Let's see if I get a second push opportunity on that. So the second push simply means the signal engages. We watch the market react. There we go. There's the reaction. So now I can enter below that. I can use that reaction bar as my entry bar. Where's the low of the day? Or low of the morning right now, 73.49. It's a little dicey. What time is it? Oh, well, okay, we're at least it's not quarter to the hour. We're a little bit closer to the end of opening range. Okay, we're still flip-flopping here a little bit. I took a chance on this signal. A better entry would have been below this swing low, or as you can see, waiting for another second push opportunity would bring us down there. I think I can probably start to roll my stops in a little. Oh, don't even need to worry about it. My favorite kind of trade. The one where the market just beelines to your profit target. You don't even have to think about stop management or anything. Hooray. Well, it looks like the market had a little bit more in it to the short side. I don't know if my stops would have allowed me to run out this little bit of a pullback here. I probably would have been tagged at break even, and then I would have had to look at getting on board again with this number 3 signal. But a decent follow through all the same, and it looks like now we are going to challenge the opening low. I'm just curious here. This is the daily chart again, and I just use the daily chart as a bit of a reference to see where I am relative to the bigger picture, because I know there's other traders that are going to throw a trend line in there, and I wonder whether we're going to see a little bit of buying as we get closer toward the bottom of that trend line. Will they see this current pullback as a bull flag? I suspect the market, see, the market has different phases. Oh, here, I can show you on this chart. Initially, when the market is moving really, really fast, that's referred to as a breakout phase, right? You just start buying. You don't need a reason, just buy, because the market is in a breakout phase. Well, after a breakout phase, the market will tend to move into a trending phase, at which time it tends to form these channels. Well, after the trending phase, the market starts to move sideways. And after an uptrend, this is generally known as a distribution phase. After a downtrend, it's known as an accumulation phase. So if in fact we are starting to move more into this sideways type trading, it would make sense that we're going to be looking for a bottom. It may be here, it may be here. I don't think it would be all the way down here, at least not yet. That's kind of the Reader's Digest version of market trend without the corny jokes. Although I can tell corny jokes. My grandson is at the age now he understands a corny joke and a lame joke. And I got a lot of them. All right. Looks like we're getting a little bit of buying come back in now. The Eagle's still full on bear mode as it's below the hard edge of the trading band. So we're experiencing a little bit of a pullback, maybe a big double bottom. The Hawk was trying to get bullish, but we got these yellow bars. We got a late filter entry here on the Falcon, which tends to be a fairly reliable signal. And that's going to coincide with our 232 signal here on the Raptor. So we've already got the counter trend. We have the hard edge bounce now, the number 3 signal, which, by the way, has a second push opportunity. The next buy signal is going to complete the 232 type formation. And I don't know if that's going to lead to a rally or not. I've got my stops ready. Watching the Geiger counter here, it's dead neutral, although it's pulling a little bit here to the sell side. Oh, there. I'm looking for it when it does this, when it pulls and sticks. Okay, there's my signal, my 232, and there's my second push opportunity. I don't know, it's a bit of a mess right now. So once again, just a quick review of this counter trend signal. We have a buy signal, which is highlighted by the number 2. Then we have a hard edge bounce that doesn't go anywhere. And that's followed by another buy signal. Now, if it develops close enough to the low price, it will print 2, 3, and 2. But the way this is printing, it's too far removed from the low here to meet the programming requirements. And it looks like we can probably cancel that right now. as the market not in a very cooperative mood at the moment. Oh, well, here we go again. We have another buy signal. In fact, the market's at a point now we could use our OCO signal. So we could throw a buy order in up there. We can throw in a sell order below down here. Remember, these orders are live when you put them on your chart. And I got bumped out there because I was moving it. So let me just put that back in. And because this is potentially a trend changing direction, I need to give the market some room. Dan's asking, how did you change your signal colors to light pink on the Falcon? Well, that's very simple. Let me show you. You can change any of your colors on your tools. I hope Ben's not in the room. Sometimes programmers, they get a little bit, they're not very creative. They're thinking about the program. They're not really thinking about the aesthetics. Okay, so you go to you right click on your chart, go to your indicator window and find your Falcon. And then from here, you just pull down and you can find all your alert parameters. So you just click on one of those and then select your color. Same thing with your cells. Just select the color that you want. And you can do that for all your tools. You can change your arrow color, you can change your trend line colors, you can change your filter color, whatever you like. And this is true for all the tools, not just the Falcon. You can change it on, I've changed mine on the Hawk as well, just so I can distinguish a little easier from the bars. And likewise on the Raptor. Although I think the Raptor, I'm running the original color set. Okay, well, they're struggling here a little bit, and I'm probably going to get stopped out as this little buy breakout did not have any follow through to it. Or I'm just going to end up getting stuck in a sideways trading range again, which is not very good either. No, looks like they're going to run me into the lows and then probably reverse. Scoundrels. Yeah. Counter trend trades. What can I tell you? It's always so risky. They're great when they work because they're fast. That's the big deal with a counter trend move is because you're catching traders on the wrong side of the trading equation, they tend to move very, very quickly. They're still quite bearish. See, the other thing with a counter trend trade, this is really the reason you should avoid counter trend tradings when at all possible. Not only are they lower probability trades, so I took a look at buying the market here on a possible reverse. To me, it looked like perhaps a bottom was in, but they block you from taking the with trend trade. You have to be really fast to take an opportunity on those with trend signals when they develop. Well, there was a little pullback here. Didn't quite make it to the hard edge. We did get a macro pullback signal, however. Okay, well, we're slowing down here a little. Might have been a little bit early with my buying attempt. John asks, Eric, do you ever trade the E-mini? And that is a fantastic question. I tend to favor the NASDAQ, and while we're waiting for another signal, let me show you why. Everybody goes towards the E-mini for day trading because, well, it's a huge market. It's one of the world's largest markets. And let's face it, trading the E-mini is sexy. Everybody knows the E-mini. The problem with the E-mini is the tick value. The tick value on the E-mini is $12.50 a tick. The tick value on the NASDAQ is $5 a tick. But people say, well, at $12.50 a tick, aren't you making more money? Well, let's find out. People assume that if the E-mini moves 20 ticks, then the NASDAQ will move 20 ticks, or the mini Dow or the Russell or whatever you're looking at. So they say, well, the market moves 20 ticks. In the E-mini, that's $250, and in the NASDAQ, that's only $100. So I'm making 2.5 times as much money trading the E-mini. But is that true? So let's take a look here this morning. Let's do this move here from, well, let's do the move out of the open. So here's the opening bell. From here to the reversal high, about 45, 50 minutes later. Let's see whether it's actually more profitable to trade the E-mini versus the NASDAQ. So here is our entry, and up here. So that move is worth $362. Let's see what it's worth on the NASDAQ. So we're going to go out of the opening low to this high. So the opening low up to here is worth $660. So this is actually, the NASDAQ is actually outperforming the E-mini at this point. What you're going to find, excuse me, sorry, had a little bit of a coughing fit. What you're going to find is that very often the moves in the E-mini and the NASDAQ will have the equivalent dollar amount. In this case, you can see the NASDAQ actually outperforming the E-mini almost 2 to 1, almost producing twice as much profit. But here's the real kicker. We know the E-mini is worth $12.50 a tick. The NASDAQ is worth, the NASDAQ is worth $5 a tick. That means that dollar for dollar, I should be able to, providing I can afford the margin, I should be able to trade at least 2 NASDAQ contracts for every E-mini contract, right? Because it's half the tick value. So in actual fact, this trade is not worth $660, but it's worth $1,320 because I could afford, at $5 a tick, I could afford 2 NASDAQ contracts for every E-mini contract that I bought. So, you know, it's one of these things, people look at it and they assume, well, higher tick value, I'm making more money, without actually taking a look at some of the parameters behind the trades. They never compare move to move and say, oh, well, am I better off trading the NASDAQ or the mini Dow, or am I better off trading the E-mini? Or let's do it here on the Russell. Here's the Russell. So let's take a look at that same move now on the Russell. Hold on a second here. Come on. Oop, wrong way. Okay, so let's go. Oh, hold on a second here. I gotta fix this. My trade manager is malfunctioning. All right, that's better. Okay, so let's take a look now at the Russell. So we're going to, this is the same move, out of the open to the swing high, $345. The Russell trades at $10 a tick. So again, with the NASDAQ versus the Russell, I could afford two contracts, in theory, depending how the trade is set up, but for the equivalent dollar amount, right, if it's going to cost me $200 in risk to put on the Russell trade, and it's going to cost me $200 in risk to do the NASDAQ trade, I should be able to afford two contracts for every Russell contract. So once again, the NASDAQ outperforming the Russell because of the lower tick value. So, you know, don't let those little tick values fool you. They can make for some pretty serious profits. Besides that, you can see that the E-mini is relatively quiet here today. So out of the open, well, we had the number 2 signal. Now we're producing a number 1 signal to short, but that's pretty much it for what we've had signal-wise. That's not necessarily a bad thing, you know, fewer signals. But I think the NASDAQ has got a little bit more volatility to it as well, relative to the E-mini. So if you haven't already figured it out, you can tell I'm a fan of the NASDAQ. I think it's a ideal day trading market. It has all the advantages. Maybe the downside is the volatility. Is that sometimes, as you can see, you can get yourself stuck on the wrong side because the market is volatile. It's giving you an attractive looking counter trend signal that maybe you shouldn't do. Yeah, it's a good question though, John, because I get a lot of emails asking, do you trade the E-mini? And unless you're trading 100 contracts or even 50 contracts, there's no reason to go to the E-mini. People usually go to the E-mini because they're trading huge volume and they need the market to absorb the volume. If you come into the NASDAQ here and you throw 50 contracts on it, you're probably going to slip the market. You won't, the E-mini won't even notice. All right, here we got a second push opportunity on this number 3 signal. We'll see if we get some follow through on that one. A nice trend. There is the possibility here of a reversal, of course, because our band is starting to get a little bit broad. And there's a chance that we're going to get a breakout after, or a retest, pardon me, of the breakout. So here was the little bit of a trading range that we had. And we've broken through there. So there's a possibility the market will try to come up and retest that zone. So you could actually place your stops a little bit higher. Initial stops, right? These are initial stops. This is your safety net. This is if the world comes unstuck and I get stopped out, I don't want to lose my short stop. All right, got the break even. Oh, don't flinch just yet. Just a few more ticks. Come on. You can do it. There we go. Oh, whew. Okay. All right, let's put that back on the shelf. So, just a little bit of a lesson there in staying with the trend. Oh, nice. A little bit of extra follow through there to the short side. And now we're kind of a little sideways. Things may be getting a little bit more bullish. As you can see, we've had a very strong move lower. We'll see whether or not we get a little bit of a bottom. An easy way to see a bottom developing is not so much trend line breaks, although those are helpful, but rather if you kind of connect the dots on the other side, you can sometimes see when a bottom is forming. So if it starts to swing higher like this, then we can look for a breakout, knowing that there's two moves to a breakout. So if we deem that to be a breakout, that would be move number one. The market will pull back a little bit, and then we can look for move number two. This will be our high probability opportunity, that one right there. That's the thing with trading. Sometimes you gotta sit around for a long time. John asks, I'm new, so what percentage of the time do you trade the NASDAQ in the trade room? Well, unless somebody requests a different market to trade, 100% of the time. If you're interested in the E-mini or the Russell, I'd be happy to pull them up. But yeah, the NASDAQ is my personal favorite. So like I say, unless someone requests something, that's usually the one I'm focusing on. All right, here on the Falcon, we've got ourselves a late filter entry signal. Let me set that up really quick here, and then I'll explain what's going on. So again, this is counter trend, but this tends to be a pretty strong signal, this late filter entry, and hopefully they don't tag me on the wrong side of this trade. The late filter entry signal occurs when your filter goes out of sync, comes back into sync. Your trend line, however, never changes color. We had another one here, a late filter entry signal. Oh, actually, we had another one up here. So a couple very strong late filter entry signals. This one going counter trend now, and it's also coinciding with a trend change signal. We'll see whether they can muster a little bit of a rally, maybe get back up here. Toward those swing highs that we were looking at. They're coming back on the trend now, trying to recover the trend. trend changes, as I've mentioned before, they take a little bit of room. So you need to give the market, at least to start, you need to give it enough room to change direction. Well, they're thinking about it. Come on. Sometimes it helps if you push them higher with your mouse. There we go. Come on, get up there. Get going. That's it. There we go. Come on, get over that hurdle. That's it. Don't stop. All right. Gotta keep pushing it higher. There we go. That's it. You can do it. All right, we're about to hit the break even. Of course, you can always manually take your trade to break even with that break even button right there. Well, they just not giving us the follow through. Sorry about that. Sitting on my mute button again. Thanks, Steve, for telling me there was no volume. Nelp asks, hi Art, when you take a trade, do you look at the left side of the chart to see if there is a support or resistance area? And it's a yes and no kind of situation. If the market is trending, resistance is going to be more important in a downtrending market, and support will be more important in an uptrending market. So in a downtrending market, support doesn't mean anything, right? Because the market cannot trend if it's going to honor support. Resistance, however, is a little bit different. If you have a resistance area, you can anticipate that the market is going to honor the resistance area if it's going to maintain the trend. The problem with support and resistance areas is people get carried away. They start looking at too many levels and they say, oh, well, there's support down here, there's resistance down here. I couldn't possibly take this trade because there's support down here. Yes, there's support down there, but as I mentioned, if there's a trend, support doesn't really mean anything. If you had the same kind of situation back here where you said, oh, look at all this support and here's resistance, I couldn't possibly take this trade because of all this support, but look at the follow through. Why was there so much follow through? Because there was so much support here. The stronger the level, once it gets broken, the bigger the reaction. And what I will pay attention to is retests. So when we have a breakout, here we had a very quick little retest of a support zone. So I do look at it, but I try not to get too carried away with it. James is asking, does this resemble a double bottom maybe? And yeah, maybe. We're certainly looking at a test of the extreme, in this case, the extreme being the low. Here now the retest. And we may get a pushback from that, but as I said, the trend is down. So if you're in doubt, you're probably going to be better off on the short side. And here just to we are getting some buying coming in. Possible rule of three here on the Eagle. We don't have that third signal yet, but we do have the parameters of a rule of three. So just a refresher, the rule of three on the Eagle is your counter trend signal on the Eagle. So we obviously have a downtrend, but we're starting to print signals. We're starting to print buy signals. Now, normally we will get three of these signals before the market actually reverses, but we've already had a retest, right? We've had the retest of the low. So even though we only have two buy signals, you could still call this a rule of three. I would probably either use it as an early warning or use a second push opportunity to enter, or maybe even just enter above that swing high. And ideally, you should cover the trade down here below the current lows. So far, the market is still in a downtrend, although it does look as though we are flattening a little. I suppose this could be another OCO type opportunity where you could look to short below here, buy above here. Remember, these orders are live. When you're using your OCO, you're not using your trade manager to place your orders. Rather, you're just right-clicking on your chart and selecting your order. I don't know if we're going to see much more of a move here this morning. That was a fairly active session. I didn't think we were going to see that much activity today, but we'll stay with it for a few more minutes, see what happens. Okay, so here now we have a completed rule of three signal, 1, 2, 3 signals. And like I said, you can always use a rule of three as an early warning. We're going to get comparable signals here on the other tools. You can see the Hawk already giving a first micro-macro cross. The Falcon, a late filter entry piggybacking on a trend change signal. And here on the Raptor, we actually got an early signal back here with the number 2. But we also have an early cloud crossover signal, which should develop into a proper cloud crossover signal here in a moment. All right, they're flinching again. Remember, resistance is the more important part in a downtrending market. But we should get a little bit of a pop if they get above there. We'll see. No, they're not quite ready to commit yet. We're going to get a cloud crossover signal here on the Raptor. The Geiger counter is kind of bearish, though, so that should be a little bit of a warning. There may not be much follow through. All right, well, they kind of hitting the skids here, and well, it is Friday, and we're closing in on the lunch hour break for the market, so don't be surprised to see a little bit more sideways trading here. We're going to button up the room here in a moment. Oh, I see there's another question here from John, which I'll get to in just a minute. But if you're going to be trading the rest of the session here, I think you can anticipate a little bit more sideways trading. The market is not likely to make a huge recovery from here. There could be a little bit of a pushback. We may even see 73.50-ish. Let's see if we have a resistance zone up there. Yeah, maybe a move back toward the low of the morning, but I think that would be a fairly ambitious move for the market right now. What tends to happen is if there's a big move during the day, the market will tend to consolidate for the rest of the session rather than reverse on it. So just a little something to keep in mind. And we'll finish here today with John's question. John says, what are your comments on margin? At Thinkorswim, NASDAQ margin is $7,700, while at Ninja, it's $500. Yes, John, it pays to shop around. Brokerages, of course, set their margins. Normally, day trading margin is a lot less. Like at Ninja and comparable brokerages, you should be able to get day trading margins on the NASDAQ for about $500. $7,700 is usually an overnight margin, but it's the broker's playground, so they kind of set the rules. And like I say, it does pay to shop around a little. So don't be afraid to ask your broker about those kinds of things. And if you don't like what you're hearing, well, there's lots of brokers out there to shop around. All right, enjoy your weekend, and I will talk to you again on Monday. We'll see you then.